Hi, I'm Cassie Villela. Welcome back to my channel. On this channel, I talk about all things real estate, whether that's real estate investing, different market reports, and home maintenance, kind of all of it. So if that's your thing, then please subscribe and like this video, leave some comments, and we'll get started with our market update. So this is our market update for April 27, 2021. And I'm pretty excited because I've got some new data to show. So the COVID report is good. We have a decline in cases, a lot of people getting vaccinated. Things are starting to open up again. Groups are starting to meet again. So that's fantastic. I'm very excited. We're going to look at our showings per week. So the blue line is, of course, 2020. And the red line is this year. So that dip you see on the blue line is when COVID started and people were not going on showings. People were staying home. So that's why there's a difference there. Then, it's a little lower than we would expect it to be this time of year, but I suspect that that is because there is less inventory and not because there are less buyers. There are certainly quite a few buyers. And then rental showings, kind of the same thing, the dip from last year. And then we're just in our kind of normal range for this year. The weekly home sales. So you can see we finally have caught up to where we started. So I was able to start the comparison of this year to last year. And you can see that we're pretty much exactly where we were last year in terms of how many homes we're selling, a little bit lower, but not too substantially for April. But here is where you can see the big difference, the median price. So, it's obvious looking at the line that it's going up over time, but I do feel like once you put the red and blue together there, you can see the difference, and it's just really apparent. So that's really interesting to have that. My screen's over here, so sorry, I'm looking over here. But so March, single family homes. So all of the circle data that I have here comes from the San Antonio Board of Realtors. They put out a market report once a month, and that covers the entire San Antonio and surrounding areas. But it's primarily San Antonio and the different municipalities in Bexar County. So we have an increase in home sales from this year to last year, a pretty substantial increase. I do feel like that has more to do with COVID happening last year than there just being that many more sales this year. I think that number is skewed. And next, when we get the April data, it's certainly going to be skewed there. So the prices, though, are not skewed. That is definitely a reflection of reality. I think anybody who is active in the market can attest to that, anecdotally, that it is just bonkers. So I have the average and the median there. You normally want to use the median because the average can really be skewed by just a few really expensive homes, and that can really throw off the true average. So we usually look at the median. That gives you a better indication of what is really the average basic that we can expect. So the median increase, though, is still in double digits year over year, which is just unprecedented in San Antonio. I mean, I know that that's common in other markets, but in San Antonio, gosh, to track my numbers as an investor for the last few years, I always used an appreciation rate of like 3 or 4%, for San Antonio. Like, it's not really appreciating that much. But now it certainly is. The multifamily is, I wouldn't look as much about the percentages here because it's just such a small number. We have so few in the market. 14% decrease in sales. Well, yeah, but 42 to 36, not that big a deal. The prices, though, are not as extreme as the single family homes, which makes sense because multifamily, those valuations are going to be more based on rent. And that's more of a financial calculation there. Whereas single family home prices are driven by the market and what's in demand and how many buyers there are. So we've seen a slight uptick, but not as substantial in the single family homes. And then residential rental. So these are units rented out. So a sale in this case is a home rented out to a tenant. So we actually had a decrease from March to March, from 2020 March to this year, a slight decrease. But the rent price has gone up a lot. So again, double digits. It's gone up, $150 a month, which is really substantial in San Antonio. Not that I've been doing it forever, but just, year to year in most of my rentals, I might be expecting like a $20, $25 increase, maybe 50, but 150 year over year is kind of extreme for San Antonio. It definitely makes sense with home prices, though. As home prices rise, then rent tends to rise as well, because owning those homes is just getting more expensive. So, and here's the new data that I pulled up. So, what I thought it would be fun to do is to compare different, San Antonio has San Antonio City proper, but then we have some different municipalities. And I thought it would be fun to pull out and compare those, compare the San Antonio market to these little municipalities and see if there's a difference. And so you can see that across the San Antonio market, the change has been, about 9% over the last year, but I want to call attention to the last quarter being 4.5%, over 4.5%. So, I mean, that really does jive with what is going on in the market, with how hot it is and how much prices are just skyrocketing. But then you look at Live Oak, this is just funny to me because I lived in Live Oak for a while, and I loved it. It's a great little municipality. It's got a great location and great amenities and things. But it has just, I think people who've lived there a long time are like, what is happening here in Live Oak? Like, why is it going up 5.5% in a quarter? But I think what is happening is that there are a lot of homes in that neighborhood, especially north of Topper Wine Road. There are a lot of flips going on in that area. So, we're seeing all those flips. We're seeing a lot of value coming to the area. So Live Oak is the one that has increased the most out of what I pulled up. Converse is right there behind it, though. Converse, the last quarter, increased 5%, the median home value. So, Converse is also just, even over the last month, 2%. So we're seeing prices rise as quickly in 1 month as, we're used to them rising in about a year. So it's just kind of bonkers to those of us who have been here, because you can see over the last 24 months, only 16%. And then over the last 12 months, 10. So it's just continuing to get hotter and hotter and hotter as we go. And then Cibolo, Cibolo's numbers are a little strange because Cibolo is huge. It goes all the way from I-10 to I-35, and it's got a lot of different kinds of properties. So I have a feeling that if we narrowed this down to like the part of Cibolo that's close to I-35, it would be a lot higher than this, but it's, still pretty high. And then I threw in Alamo Heights just to kind of compare. I was really curious because Alamo Heights is, kind of one of our nicest neighborhoods. You can see the median home value is $618,000. So before we were looking at 200, 269. So a pretty marked increase there. But the value year over year is not, it's 4.7. So it really hasn't gone up that much. And that does jive. I've said in groups, at church or whatever, like, oh, the market's going crazy. You just put a house there and get way over asking price. And I've had people respond like, well, I'm trying to sell a house in Alamo Heights and it's been sitting for months, so it does seem like in that high price range, we are not seeing it quite as hot as the rest of the market. So next week, I think I'm going to pull some different zip codes, and well, in 2 weeks, I'll pull some different zip codes and do some more comparing with that new tool that I got, just play around with it a little bit more. But yeah, I think the main message overall is the market's bananas. Things are just going up so quickly that buyers can't keep up. I know that new home construction, I was talking to a home builder recently, and he was saying that like they can't build them fast enough. They're just selling like hotcakes. So, you know, kind of the same thing we've been saying for the last year. Like this market is just, where is the top? Like it just keeps going. But even more, it seems to just ramp up more and more and more over time. Which, you know, I'm not a fortune teller. I wish I was. I wish I knew if we were at the top of a bubble or if this was just the beginning. I honestly, I can't tell you. I have very smart people tell me both of those things. So who knows? But luckily, this will live on YouTube forever. So that's why I'm not going to make a prediction. I hope that was helpful. I will see you next time. If you would like to come in person to our meetup so you can ask questions afterwards and network with other investors in the area, or even if you're not an investor, you're just moving to the area and you want to get to know people, we have a fun little meetup. It's every other Tuesday. I'll link in the description of this video how to sign up for it. And until next time, thanks.